3 o'clock, a webinar devoted to your self-directed IRA questions. So this is just going to be all Q&A. So go ahead and start typing your questions into the chat box, and then I'm just going to answer questions until we run out of questions to answer. A little bit about Entrust. First of all, I need to put this up. We do not provide any advice or suggestions on what people should invest in. We are a third-party administrator and custodian of self-directed retirement accounts. So if you're considering making investments into anything, we encourage you to talk about that with advisors, CPAs, friends, family, whoever in your life you seek that kind of advice from, but it won't be Entrust. We won't be giving you any advice or doing any due diligence on any investments that you want to make. So very quickly, going to go over a little bit about Entrust, what exactly is a self-directed IRA, what are the benefits, and then we'll get into the Q&A and how to get started. For those who have been through these webinars before, have seen all this, we are administrator and custodian of self-directed retirement accounts. We've been in business since 1981. We currently have approximately 22,000 accounts. We hold almost $3.5 billion in assets. And with Entrust, all of our account holders get a single point of contact. So I'm a regional business development manager. I have counterparts in the company, Munzer, who handles sort of the southeast part of the country, or southwest. Mindy does the southeast, and then Tony is our northeast business development manager. We're located in the different parts of the country, and through that business model, for anybody who needs assistance with opening an account, doing any paperwork, having any questions or anything like that, you have a specific contact. You have their direct contact information, phone number, email. With majority of our competitors, if you want your accounts established, if you have any questions or need help with anything, you're going to call an 800 number and get whoever happens to answer the phone. So we consider ourselves to provide superior client services through our single point of contact model. The majority of our company are certified IRA service professionals. We are a leader in education in our space. We are the only company that has a national continuing education program for realtors, financial planners, in which you can earn CE credits by taking a class and getting a class on self-directed IRAs. Those are by invitation. So you kind of have to invite us to come in and teach the class. So if you're, and it's for the realtor license, it's in certain states. So particularly here in California, in Northern California, if you want to have a class, if you have a realtor association or you're a realtor in an office and want to have a 2-credit, 2-hour class, let me know. We'll be able to do that. So what exactly is a self-directed IRA? The individual investor has to make all the investment decisions. We as custodians don't provide any investment advice. When you have an account with a bank or brokerage firm, they are going to typically provide advice to you. They will do research and due diligence on the fund or stock that you might want to consider. They'll have a conversation with you about your risk tolerance and age, and then they'll recommend investments for you to invest in. And those investments are going to be publicly traded stocks, bonds, and mutual funds. So if you want to invest in non-traditional assets, if you want to invest in something other than just stocks, bonds, and mutual funds, then you need a company like Entrust. You need a self-directed custodian. In order for a retirement account to be considered a retirement account, it has to be held by a third-party custodian, and that's the role that Entrust plays. We are a custodian of retirement accounts just like Schwab and Fidelity and Merrill Lynch, but again, the difference between them and us is that they will advise you and sell you investments, and they limit you to stocks, bonds, and mutual funds, and we don't advise you and we don't limit you. The due diligence on any investments is entirely the responsibility of the account holder. Again, Entrust doesn't do anything that, and all the investments that you hold and the accounts are regulated by the Internal Revenue Code, just like it would be with any traditional brokerage firm. The benefits, you get to take control, make your own investment decisions. It allows you to diversify into things other than stocks, bonds, and mutual funds. And finally, any earnings that you make on the investments you hold inside the retirement account grow either tax-deferred or tax-free, depending upon the type of account that you have. So if you want to open an account, just go to our website, theentrustgroup.com, open an account. Doesn't take more than 10 minutes. Fund your account. typically either transferring from an existing IRA, rolling over from a 401k, or making an annual contribution. And then finally, step 3, you instruct Entrust to purchase the investment you want to make. So the investment's held in the name of the retirement account. You instruct Entrust as the custodian to process that investment on behalf of your retirement account. I added this screen because we typically get, with these Q&As, we get a lot of fees questions, specifically, what are your fees? So I'm just going to put this up there for anybody who wants to know our fees. There they are. I'll come back to this as necessary. And also you can find all our fees on our website, which is thentrustgroup.com. Up at the top you'll see a little tab that says new, log into your account, open your account, and just to the left of that you see the word fees. Click on that and our fees are detailed there. So for anybody who's going to ask a question, what are your fees? Take a good look at that. That's what our fees are. Okay. Let's get with the questions. I'm going to put my information up there for now, but again, just type your question into the chat box and I'm going to run through them as we're going along and take as long as we need to answer all the questions. Okay, here we go. Question number 1. I've just put IRA money through Entrust in California real estate. Thank you for your business. Every month I will get a check. Instead of having the check go to my self-directed IRA with Entrust, can I have them make the check to me and I will pay the taxes on it at year's end, or will this mess up my self-directed IRA? Yeah, the check has to go to your IRA. Since you don't own the property, your retirement account owns the property, they have to send the check to your retirement account. Now you can physically receive the check from the tenant, but the check has to be made out to your IRA, and then you would forward it to us and we would deposit in your account, and then you make a withdrawal from your retirement account. So you're not allowed to receive the check directly to you and then report it on your taxes. We have to report the distribution to you on the taxes. So we have to, when the check comes to us and we deposit it and then you take that out as a withdrawal, at the end of the year, all the withdrawals that you take, we are going to file Form 1099 and we send that to you, 1099-R, and we send it to the IRS and we send it to you as well. And then you report it on your taxes and report it when you file your taxes and pay taxes on at that point. So when you take a distribution, we don't have to withhold taxes. If you want to pay your taxes at the end when you file, that's fine, but the flow has to go into your retirement account and then you withdraw it from your retirement account. And just to give you fair warning, if you were to do it the way you want, if you were to have the tenant send the money directly to you and then you were to deposit into your personal savings without it coming through your IRA first, and then you paid taxes on at the end, although you paid the taxes and that's all well and good, but by depositing the money in your own personal account, you're creating a prohibited transaction in your retirement account. And creating a prohibited transaction puts your entire account at risk. So your account, by doing that, your account could get disqualified and then get distributed to you and then any potential taxes and penalties associated with that. So I mean, I get the idea, but you're not allowed to flow it that way. It has to come to the IRA and then you can take a withdrawal from the IRA and pay taxes at that point. Okay, next question. I invest in trust deeds as a lender. What entity should my borrowers make their interest payments to? Do I need to change the entity the deeds of trust are recorded in? When you use your IRA to buy any investment, including lending money on a deed of trust, the name of the entity that's making that loan, that's doing that investment with Entrust, would be the Entrust Group for benefit of your name and account number, or the Entrust Group FBO, your name and account number. So you say, do you need to change the entity the deeds of trust are recorded in? If you used your IRA to process that investment, then, like particularly with Entrust, then we wouldn't process that note without the deed of trust being properly recorded in the name of the IRA. So I'm not sure what you mean by change it to. If you process it through the IRA, then they're recorded in the name of the IRA. If you process them in your own personal name under your own personal investment, then those are not eligible to now be placed into your IRA. You had to originate the loan from your IRA with the IRA being listed as the lender on the promissory note and the deed of trust being recorded in the name of the IRA. But ultimately, I guess, and the short answer to your question is the name of the entity making the investment would be the Entrust Group, FBO, your name and account number, or if you're using a different custodian, it would be that custodian name for benefit of your name. And I mean, they might have different titling on how they choose to do that. This assumes you're doing the investment directly in your IRA. If you're using an LLC as a pass-through entity, then the deeds of trust should be in the name of the LLC, and it should be recorded in the name of the LLC. Next question, I have a self-directed account and I own properties in it. Regarding the required minimum distribution, how do I evaluate the value of my IRA for my required minimum distribution to know how much to withdraw? Also, can I withdraw part of a property for the required minimum distribution? So first of all, as far as evaluating your IRA or providing a fair market value would be based on the value of the assets inside it. So if you have a property, I mean, there's various ways you can do it. You can have an appraisal, but you don't necessarily need to get an appraisal. You can have a realtor run comps. Perhaps your property tax assessment could be used as a fair market value. So there's a few different ways that we accept. We detail them on our fair market valuation form on what different documentation we need you to provide us as supporting documentation to detail the fair market value. But you do need to provide the fair market value to your custodian. And the next part of your question, can you withdraw part of the property for the required minimum distribution allowance? You can. That is a good question. You are allowed to take an asset or a percentage of an asset in kind as a distribution. So just to give you an example of like how that would work, let's say you have I'm going to use big numbers here. Let's say you have a property worth $1 million inside your retirement account. You're subject to required minimum distribution of 3.5%. And that property is your entire account, and so your only recourse is to take in-kind distribution. You can take the equivalent of, let's say, again, 3.5% would be $35,000 on $1 million property. You can take 3.5% of the value of that property as a distribution to you, or the equivalent of $35,000 worth of that property. Now, once you request the distribution and we distribute that to you, it's now incumbent upon you to go and change titling on that property to now represent that it's owned 96.5% by your IRA and 3.5% by you personally. So the answer to your question, can you withdraw part of a property for the requirement distributions? Required minimum distribution, the answer is yes. But you have to make sure you do the paperwork and get the titling changed on that property once you've taken a portion of that property as a distribution to you. Okay, next question. What are the transaction fees? There's my first fees question. And I assume they are in addition to the maximum $1,995 a year fee. So just bear in mind our annual fee, that $1,995, is one fee option. So you see option 1 based on number of assets is $299 per asset. Option 2 is based on the value of the account with a maximum of $1,995. And then down below that in section 4 is our transaction fees. So I'm going to leave this up for a minute while I answer a question or two so you can take a look at our transaction fees. And section 3, purchase and sale of assets. Those are transaction fees to process an investment, non-real estate and real estate. So yes, our transaction fees are in addition to any annual fees that we charge. If you want to see that, if you're maybe seeing this on a small screen, just go to our website, thentrustgroup.com, and click on our fees at the top of the page and go through it there. Next question, what are the mechanics of closing a loan where I am lending money recorded by a deed of trust? Okay, so the wording here, you say you are lending money. I'm going to restate that to where your IRA is lending money. And if your IRA is the lender, then you would submit to us when the money comes in, you would fill out our deposit form instructing us that it's a payoff on the note, and then we would send a reconveyance letter to the title company, and then the title company would do whatever they do to forward that note payoff to you, or whatever it is that they forward to you. But essentially with Entrust is when the money comes in, you fill out a deposit coupon informing us that the money is the money is going to close out the deed of trust, and then we would inform the title company that it's been closed out. Next question, do I find my own escrow or title company to close a deal? What is the amount of time for an investment to get funded? Yes, we are a administrator and custodian of the account. You have to handle all the other due diligence and legwork. So if you want to buy a property, do a trust deed, it's up to you to work with the escrow or title company that you want to work with. The amount of time for an investment to get funded, I mean, that's going to depend upon how quickly the paperwork comes in. It's not just up to us, the title company, the escrow company, you as the account holder, sometimes the seller, like all have to complete certain paperwork and get it to us. Our turnaround time is 3 days. It's approximately 3 days from the time we receive the documents to get everything processed, to have it work its way through the pile and to the top of the pile and get processed. But from the amount of time standpoint, I mean, it's a closing. So closing can take a few weeks. It can take longer than that. It doesn't just depend on Entrust. But again, our turnaround time is 3 days. If the self-directed IRA is a majority partner in an LLC and the LLC buys a property and gets a loan secured by the property only, does that create unrelated business income tax for the LLC or the self-directed IRA? It potentially would create unrelated business income tax or unrelated debt financed income tax for the IRA, yes. If you're using leverage in an LLC and the IRA is a percentage owner of the LLC, then based on the amount of revenue generated for, how do I want to say this? The amount of revenue generated for the LLC and what percentage ownership the IRA has in that LLC, the IRA could certainly be subject to UBTI or in this particular case, it's UDFI, unrelated debt financed income tax, which is the opposite sides of the same coin as UBIT. Next question, please explain your transaction fees, specifically in investing in a fund that makes periodic payments as its investments pay dividends or are sold. Do these payments trigger a transaction fee? The answer to that is no. A transaction fee is you instructing Entrust to purchase an investment, and then we use the account to buy the investment. So the purchase of that asset would be subject to a $95 transaction fee. The investment into that fund would be a one-time fee of $95 to purchase the investment. And then potentially at the end, whenever you close out the investment or when it gets sold off, then there's a $95 sale at the end of it. The only other fees you might incur that says it makes periodic payments as the investments pay dividends or sold, it depends upon how the payments come in. We have a wire transfer fee for both incoming and outgoing wires of $30. So if the fund sends the money to Entrust via wire, it's going to be subject to a $30 wire fee. That is a bank fee that our bank charges us. If they send the money via check, there's no money to deposit a check. If they send money via ACH, there's no money to deposit an ACH. But an ACH can have problems from a informational standpoint that they often don't provide the for further credit to information that we need to deposit into your specific account. But again, those aren't considered transactions. That's just money being deposited into the account. If it comes by wire, it's $30. If it comes by check or ACH, there isn't any fee to deposit a check or an ACH. Next question. I know there is no interest earned in cash holdings. Is there any FDIC insurance? Yes. All cash that we hold is fully FDIC insured. Next question. I want to use my Entrust funds to purchase a home with my daughter. Is that allowed without losing tax-deferred status? What happens if when we sell the home at a profit? You are allowed to partner your IRA with your daughter on a new investment, but the key, it has to be a new investment. So, for example, if it's a home that your daughter already owns and you want to bring your IRA in as a partner on that, you can't do that. You're not allowed to do that because your daughter's a disqualified person to your IRA, and therefore it can't invest in a property already owned by your daughter. But if you're looking for a new investment, a new property, and you go find one and you say, okay, I want to use my IRA as a percentage owner and my daughter's going to be a percentage investor in this property, then you can do that. Now bear in mind, you and your daughter both can't ever use that property for personal use, right? You can't use it to purchase a home with your daughter that your daughter's going to live in. It has to be for investment purposes only. But assuming that that's what you're planning on doing, then yes, you're allowed. But again, not to repeat myself, but partnering with your daughter has to be done at the time of a new investment, of a new transaction. And what happens if when you sell the home at a profit? Well, your daughter receives her percentage of the profit and your IRA receives its percentage of the profit. And everything that goes back into your IRA, and it's based on the percentage ownership. So if you have 50-50, 50%, 50%, and the property earns, $100,000, then $50,000 goes to your IRA and $50,000 goes back to her personally. And then within your IRA, it just grew your account and there's no tax consequences to it. With your daughter, she obviously would have to report that and pay taxes on it. And you said with your daughter, so my answer to that question was based on you partnering with your daughter as a person. You could also partner with your daughter's IRA, right? And if that's what you were asking me, then yeah, each IRA can be a partner, and then when you sell the home, each of the IRAs receive its percentage of the profit, and each IRA just grew, and there's no taxable consequences to it until you start taking withdrawals from the account. Next question. Don't I lose the benefit of tax-deferred annual return from a commercial building if I hold it in an IRA? No, you don't. I mean, the whole point of having a retirement account is that it grows tax-deferred if it's a traditional or SEP or a 401k. If it's a Roth, it's tax-free. So I'm not sure how you would lose the benefit. I mean, if you own a building inside your IRA and you are getting income derived from that that's coming into the account, all the income that's going back in the account is by definition tax-deferred because it's held inside a tax-sheltered entity, a tax-deferred IRA. So I mean, you do lose some things that when you make an investment in real estate as opposed to in your personal name, and it's largely from a standpoint of being able to write off depreciation and things like that on your personal income tax. And since your IRA owns the investment, you're not writing off expenses on your personal income tax because the IRA owns the investment, not you as a person. But in order to get a tax-deferred benefit in your personal name, you have to 1031 exchange your property into the next one. That's the only way to defer taxes. With an IRA, you don't have to do that. It's just the IRA buys the property, the IRA receives the income, the IRA pays the bills, and everything that stays inside the IRA. There's no tax consequences to it. Again, the only tax consequence is when you start taking withdrawals from your account, and you have to pay taxes on the withdrawal you take. Next question, should the LLC or the IRA be opened first? You want to open the IRA first. The reason for that is because you're going to name the IRA as the member of the LLC, and the name of your IRA is going to include your account number. So the name of your IRA with Entrust is the Entrust Group, FBO, your name and account number. And if you establish the LLC and you name a member of the LLC and you name yourself as the member, you've now created an entity that your IRA is not allowed to invest in. So you don't want to put the cart before the horse. The IRA has to come first, so you have an account number, and now you can properly structure the IRA with the, properly structure the LLC with the IRA named as the member. Next question, when an account which has, say, 3 separate investments requires RMDs, is there just one RMD required for the overall account or for each investment separately? Do you calculate and pay the RMD? Are there any fees charged relating to RMDs? RMD is a calculation. The required minimum distribution is a total dollar amount based on all the retirement accounts that you hold. And then you can take that RMD from any one account that you want to make. So if you have an account with Entrust that is worth $100,000 and you have an account with Charles Schwab that is worth $100,000, then you have to take a required minimum distribution for that year based on $200,000 of total account value, and you can take that RMD from whichever account that you want. You can take a portion from both, or you can take it all from one account or the other. We can calculate your RMD based only on the amount that you hold with Entrust. So if you have accounts with other custodians and you ask us for your RMD, we're only going to give you the RMD based on the account value that you have with Entrust. And are there any fees charged relating to RMDs? No. The only fee you're going to incur, again, depends upon how you receive the money. We charge $10 to send a check. We charge $30 for a wire transfer. Again, these are pass-through fees from our bank, and then there's no fee for an ACH. So if you want to save $10 or $30, just have us send you the money via ACH. Next question. I have a solo 401k or an individual 401k which contains rental properties, but looking at moving to your company. My question, do I have to sell each property to allow me to draw money out when required by government? I kind of answered this question before. No, you're allowed to take an asset as an in-kind distribution. So if you want to take a property or a percentage of a property as a distribution to you, you're allowed to do that. You just have to request it that way, what's called an in-kind distribution. We will report that distribution to you and the IRS via 1099-R. Now, you're not receiving cash, but it's still a distribution, which means you have to pay taxes on the distribution you take. So you need to have the cash available to be able to pay the taxes at the end of the year, but you are allowed to take an asset as an in-kind distribution. Next question. My wife and I have multiple different types of retirement funds, traditional employer retirement plan, SARSEP, wow, that's old school, inherited IRA. Can we pull these different types of funds as the joint owners of an LLC, which would then be the owner of the property? Yes, you can do that. Not only that, some of those accounts can broadly be combined into one account. Your traditional IRA, your employer retirement plan, and the SARSEP can probably be all combined into one, like traditional IRA. The inherited IRA has to stay in its own account. Now that assumes that, I mean, your wife and you have multiple different types of retirement funds, so you can't combine your and your wife's IRAs into one IRA. But if you, let's say you individually have a traditional and a SEP, for example, or an old 401k or something like that, that can be combined into one account. Then your wife can combine hers into her own account. Again, the inherited IRA would have to stay in its own account, and a Roth, if you have any Roths, would have to stay in their own account. But yes, you can partner those into one LLC. You just have to name each IRA as a separate member of the LLC as a percentage owner based on the amount of money that each account is going to contribute to that LLC investment. Next question. I have a traditional IRA set up with another advisor. Can I convert that traditional IRA to a Roth IRA and combine with my current Entrust self-directed IRA and invest the funds from the Roth into a non-traditional option within my self-directed IRA, such as real estate? The answer to that is yes. You're allowed to convert from a traditional to a Roth. And then if you have a Roth with Entrust, yeah, just roll that money in, then invest it whatever you want. Note that there's, converting from a pre-tax account like traditional to a Roth account, which is post-tax, is usually going to generate a taxable event. So make sure you're aware and comfortable with the tax consequences that you're going to incur by converting from a pre-tax traditional IRA to a Roth. Do you allow LLCs to be part of your IRA? Yes, absolutely. We hold a lot of those. Very frequently people will want to establish an LLC inside their IRA or even invest in other people's LLCs. Yeah, you can do that. With Entrust, we will hold LLCs. I have a property in my IRA. How long do I have to keep withdrawing my RMD? Well, I'm going to answer that question right now until you die. What if I do not have enough income to satisfy my RMD requirement? I will answer that question. Then either you're going to have to liquidate an asset or you're going to have to take an asset as an in-kind distribution. I have already borrowed money with my IRA property as collateral, which is a 15-year loan. What happens when my children inherit this? Can I sell it? Okay, so I just want to clarify something. You said I have already borrowed money with my IRA property as collateral. If you're telling me that you went to a bank and you borrowed money personally to you and used your IRA property as collateral, then you committed a prohibited transaction. You're not allowed to do that. If you're saying that the IRA borrowed money with the IRA property as collateral, then that's fine. And what happens when your children inherit this is they inherit your entire IRA, which means they inherit the property and any loan outstanding associated with this. So anything that's in the IRA gets inherited to your children. Can you sell it? Sure, you can sell that. But again, I'm going to emphasize this. If you went to a bank and borrowed money and used your IRA as collateral, you're not allowed to do that. The lender's not allowed to lend you money based on using your IRA or property held inside your IRA as collateral for you personally to borrow money. So you need to talk to a CPA because you need to get that. You need to fix that. If I want a self-directed IRA holding, if I want a self-directed IRA holding to be part of my annual RMD, do I just transfer the holding out of the self-directed IRA and have future distributions sent to my taxable account? Yes, that's exactly what you do. Although transferring it out transfer is a very specific term in our industry. You would be taking it as a distribution. So you would request a distribution of the property, of the holding of the asset inside your account, and then once we process the distribution and send you a 1099-R, it's your responsibility to now change titling on that asset. So if it's property, you have to go to the local municipality or county or however to change title on that property. If it's a note, if it's a private placement, you have to work with the borrower, work with the private company, private fund company, whatever it is, to change the name of the owner of that investment from the IRA to you personally. So we don't do that for you. You have to do that. And then all future dividend, revenue payments, rent payments, whatever it is, do go to you personally because you now own that investment personally. Okay, next question. If I have a self-directed checkbook IRA that was used to purchase a rental property, can the rent be deposited in the checkbook IRA bank account and sit there? Yes. So just to clarify, what you mean by checkbook IRA is simply an LLC owned by your IRA. And so if the LLC is when the LLC owns the investment, the LLC receives the income or the rent, and you can keep it in that LLC bank account for as long as you want. Does it need to go back into the Entrust IRA custodian account? Well, yeah, sure, eventually. I mean, the IRA owns the investment, so you can't take your own personal withdrawals from the LLC. If you want to take that money for personal use, it has to go from the LLC back to the IRA, and then you can take a withdrawal. But until you choose to do that, sure, it can continue to sit in the LLC account. But again, does it need to go back into the Entrust IRA custodian account? Yeah, at some point. What is the proper way for this to work? I think I just explained that. Have the LLC, once you establish the LLC, you buy the investment in the name of the LLC. The LLC receives any revenue. The LLC pays any bills. Then when you're ready to either withdraw the money or if you want to transfer it to some other custodian, then it has to go from the LLC back to the IRA. You'd fill out our deposit form, moving the money from the LLC back to the IRA, and then you can take the withdrawal from the LLC or you can send it from the LLC to some other custodian if you want. What if the value grows to a point where another property could be purchased? I mean, it's your retirement account. It's the money inside your account. Purchase another property if you want to. Do what you want with the money. Just don't take it into your own personal savings. You can let it sit there. You can put it in the stock market. You can buy another property. You can lend it out. You can buy a horse. I mean, you know, you can use it for other investments, or you can send it back to the IRA and take it out for personal use. Take it as a withdrawal. Next question, how would I transfer funds from another investment firm to your firm? What type of paperwork is required? If it's an IRA, if you would establish an account with us, and assuming it's an IRA, you would fill out an Ntrust transfer form and send that back to us along with a recent account statement for the account you're transferring from, and then we'll send it to your current custodian. If it's a 401k, 403b, pension plan or something like that you're looking to move the money over from, that's a rollover. And you would need to contact the custodian of that account, that 401k or 403b, to initiate the rollover. And then on our end, you need to fill out a rollover form, which is a reconciling document that we use internally to match up to the money when it arrives. Can you explain the role of an LLC as part of the Self-Directed IRA? An LLC is an asset held inside the account that can give you checkbook control over your funds. So you have the option, let's say you want to invest in real estate. Your IRA can invest directly in real estate where you find a property, you draw up the purchase contract and all the closing documents in the name of the IRA as the investor, and then we process that investment per your instruction. Or you can establish an LLC where you name the IRA as the sole member of that LLC, and then you instruct Entrust to fund that LLC, and then that LLC becomes a pass-through entity that you can manage, that you then use to buy whatever investment you want to make. So in that case, the LLC would hold title on the property, the LLC would receive the rent, the LLC would pay the bills. Again, the LLC is owned by the IRA, so eventually that money would have to flow back to the IRA from the LLC, but in the meantime, it becomes a pass-through entity that gives you checkbook control. At death, do you handle rollovers to beneficiaries? Yeah, of course. I mean, if the account's with us, and the account holder passes, then the beneficiaries become the new account holders, and so they can establish an account with us, and then it gets transferred over into those accounts. Yeah, we handle all that paperwork, or at least assist in handling all that paperwork. Next question: can you talk about the limitations on prohibited transactions with respect to real estate held in an LLC? Can I apply for non-recourse financing? Can I screen tenants? Limitations are that a disqualified person can't ever stay in a property or stay in a property or do work on a property that's either owned by an IRA or indirectly owned by an LLC owned by an IRA. So that rule doesn't change. Disqualified persons are you're the account holder, the account holder's spouse, ancestors like parents, grandparents, lineal descendants like children, grandchildren, spousal lineal descendants. Can't ever stay in a property, can't ever stay in a property, can't ever do work in a property that's owned by an LLC that's owned by an IRA. Can you apply for non-recourse financing? I'm assuming that you're meaning, can the LLC apply for non-recourse financing? And the answer is yes. The IRA can apply for a loan, and it has to be if the IRA is owned by an IRA, or if the LLC is owned by an IRA. Okay, the LLC can apply for non-recourse financing. If the LLC is owned by an IRA, it must be non-recourse loan. Can you screen tenants? Yeah, you're allowed to take on management responsibilities for your property, like screening tenants, interviewing tenants, showing them the property, meeting with contractors to have them do work, like that type of stuff. What you can't do is you can't pay yourself a management fee, and you can't keep a separate account in your own personal name on behalf of the asset owned by your IRA, whether it's a property or an LLC. So you can have an LLC that holds the cash, but it can't be an account that you have in your own personal name. Next question: am I required to get an annual appraisal on my IRA property every year? No, you're not required to get an appraisal. We have different supporting documentations that you can utilize to provide us a fair market value of the property. You can have a realtor run comps for you. You can use potentially use your property tax assessment, but you don't have to get an appraisal, is the answer to that question. Can I buy a rental with some of my cash outside of my 401k and an Entrust account, in effect partnering with the Entrust account? Yeah. As long as that investment, as long as that property is a new investment, it's a new purchase. You can't do that on a property you already property you already own. But yeah, you can certainly partner with your IRA on a new investment, and hopefully you can, because I did in my IRA. No, I'm just kidding. I know you can. Do you offer solo 401k with built-in trust? We offer a solo 401k. I'm not sure what you mean by built-in trust. I've had an attorney work up an operations agreement for a partnership LLC. My Entrust account will hold a percentage of ownership as will two other partners. Would it be better to be taxed as a partnership as a C corp? That's a tax attorney. That's a CPA tax attorney question. I don't know the answer to that. What are the biggest concerns with each option? Again, you want to talk to a tax attorney about that. Next question: I know you don't advise on investments, but how are the investments in the Entrust Connect page selected? That's a good question. Also, as a technical question, I've tried to invest, but it constantly indicates a server error. Okay, it's a good question. I don't know that I'm going to have a good answer as far as how they're selected. We are, first of all, it has to be investments that other Entrust clients have made. So they're funds or private companies that other Entrust clients have invested in. That's kind of the first criteria, and it typically is multiple Entrust clients have invested with them. So to a sense, they are referral partners that have been referring people to us and essentially have brought in business to us. We also tried to keep it spread. We have regional business development managers, so to be fair to sort of all the regional business development managers, we tried to spread it sort of between the different regions. We also tried to have a little bit of a different sort of variety of types of investments. So we're still open to putting more on there. It's actually probably a good idea for us to add more to it. But yeah, I mean, in short, the answer to your question is it's a combination of active ongoing referral partners, regional, and different types of investment. And then as far as the technical question, we'll make sure we get that passed on to our IT group to take a look at. And Stuart, maybe if you want to, I'm going to get my personal information back up here. If you don't mind maybe sending me an email with some specifics about like what exactly was happening with you so I can forward it on to the IT group. Thanks for the feedback. If I own a real estate asset and I owe real estate taxes, I assume Entrust would pay those taxes. Does Entrust charge a fee to send that check? So I'm going to again use a little bit correcting of wording here. If your IRA owns a real estate and your IRA owns real estate taxes, you assume Entrust would pay those taxes. Yes. At your instruction though, we don't just pay the taxes. You have to instruct us too. You have to forward us the tax bill and say, hey Entrust, I want you to pay this. If we get a tax bill, we will reach out to you and say, do you want us to pay this? We don't just pay it just because we receive it. Does Entrust charge a fee to send that check? It's $10. If my IRA owns less than 50% of a corporation, can I provide services to the corporation? Majority owners of the corporation is not related to me. The best answer I can give you this is potentially. It isn't a black and white thing. So, this is like in a very general, can you provide services? Yeah, potentially you can. It depends upon the services. It depends upon the role that you have in the company. 50% is the cutoff if you're like basically a silent investor, a silent partner in it. If you're like a executive with the company, then that drops down to 10%. That becomes a lot lower percent. So again, my answer to that is it depends. It depends upon the service and the role that you have in the company, but it doesn't necessarily preclude you from being able to do it, but it just it depends. My Entrust IRA holds an LLC that I set up. The LLC owns rental property. The rent checks go directly to a bank account that the LLC owns. Okay, this is all good. The LLC also holds a brokerage account that owns some publicly traded stock. Please address if this is correct or creates a problem. No, you're great. Everything you're doing is fine. Just make sure that, whenever that money, like any revenue or dividend that you get from that LLC, before you decide to take a withdrawal or use that for personal use, it flows back to the IRA first, and then you take the withdrawal from the IRA. Next question. My loans are recorded to a profit-sharing pension plan, now retired. I need to roll it over into an IRA. Could this be done to Entrust in an assignment of trust deed? Yes, you absolutely could do that. You would open an account. You would you would contact your pension plan provider, tell them you want to do a rollover. They'll have some forms for you to fill out. Then you would need to fill out our rollover form telling us that you're rolling over a property in kind. Then you would have to go to get the assignment of the deed of trust or on that property or the recorded deed to your IRA, and then forward that document to us, and then you're all set. So it takes some paperwork on your end, but you can certainly do it. I recently opened a new account and looking at my first property purchase, but don't have enough funds for the purchase. Do the funds for purchase have to come from IRA? What is the best way to seek a non-recourse loan? No, they don't all have to come from your IRA. You can partner your IRA with other investors, including yourself or your spouse or other IRAs. And what is the best way to seek a non-recourse loan? We have them listed on our website. If you go to, I'm not going to pull it up, but they're on our website. If you want specifically to know where they are, go ahead and email me. Again, there's my email address, and then I'll respond back with a link to where they are on our website. Or, you can tool around and probably eventually find it. Actually, maybe do a search non-recourse loan, and it'll take you to that page. Next question, comparing self-directed IRA real estate, how is it different than buying REITs from brokerage IRA account? Well, REITs, from a brokerage IRA are going to be publicly traded funds, whereas real estate is an actual physical property. That's the difference. If I have silver in my Entrust self-directed IRA, must I sell it in order to invest the value into real estate tax liens? Well, if you need to sell it in order to make the cash available to invest in tax liens, then the answer would be yes, you have to sell it in order to invest the value to invest in real estate tax liens. But if you have other cash, then you don't have to sell the silver. You only have to sell any investments that you hold if you need to sell it in order to make the cash available to do the investment that you want to make. Also, follow-up question from someone else, should I create the LLC with both me as a partner and Entrust Group, FBO, me, account number, et cetera? Yes, that's exactly what you would do. If you want to partner with your IRA into an LLC, you would create the LLC with both you and the IRA's partner along with the percentage ownership, right? So you would have your name at whatever percent, and then you would have your IRA at whatever percent, adding up to 100%. Next question, if I remove $10,000, $10K from my solo 401K, your company would send $10,000 to me. Yeah, if you request a distribution, we'll send you the distribution. Can I use some of the $10K to pay required taxes? Yeah, I mean, when you file your taxes at the end of the year, you're going to have a tax hit. And so however that money ends up in your savings account, you're going to have to, or checking account, you're going to have to write a check for it. So once the money is in your checking account, it just becomes money in your checking account. Hopefully that makes sense. I was told I had to use separate funds to pay required taxes. What is correct? If you want to take an asset as a distribution to you, and we're not actually sending you cash, but instead we're distributing a percentage of an asset or a value of an asset in kind to you, then you need to have the cash in your savings account to be able to pay the tax hit that you're going to incur from the asset distribution. But if we send you $10,000, then that just goes into your account along with all your other cash, and you don't have to keep it in a separate account or anything like that. And then when you go to pay the taxes, you're going to write a check from the same account that you deposited that money in along with any other cash you have. So, yeah. I think maybe what somebody told you is had to have separate funds was probably talking about when you're taking an asset as an in-kind distribution and not cash. Over a period of time, can we own the property? Yeah, good question. You can take a percentage of the asset as a distribution. So if you wanted to, say, take 10% a year for 10 years and then at the end of the 10 years own it 100%, sure, you can do that. What is the FDIC amount for the Entrust account? Well, FDIC rules say $250,000 per account. But the way it works is that in our case, we as a custodian have, let's say we have a bank account with Wells Fargo that we have, let's say $10 million. That $10 million is made up of every single retirement account that we have that holds cash. It's made up of a percentage. So Entrust as a company has bank accounts with like 90 different banks in which we hold cash, ranging from, you know, a couple million here to more there. But in each account, every account that we have that holds cash, like if your cash with us, if the cash amount of cash you have with us is 1% of the total amount of cash that we have, then your retirement account holds 1% of the cash that we have in every single bank account that we have, which means that your cash is FDIC insured up to $250,000 at every single account that we have. So if you have $1 million with us, you don't have more than $250,000. Your percentage of the $1 million doesn't exceed $250,000 at any bank account that we have. That's just the way we have it structured. Your $1 million is split up between 90 different accounts, and your $1 million is FDIC insured up to $250,000 at every single one of those accounts. And since you don't have more than $250,000, your $1 million is split between all those accounts. You don't have more than $250,000 at any one account. Okay, hope that makes sense. How can I handle property management? Can I interview the potential tenants? Yeah, this was asked earlier. Yeah, you're allowed to take on some management. You can be responsible for your asset is the best way I know how to phrase it. You're allowed to interview tenants. You're allowed to show them the property. You're allowed to, you know, again, meet with contractors who are doing work, show them what work. You can go into the property. Like you don't have to be that hands off. What you can't do is you can't pay yourself a management fee, and you can't do physical labor on a property, right? You or any other disqualified person. Now, that being said, if you find yourself holding like a major apartment building that requires the property management is for all intents and purposes a full-time job, well, now you probably can't handle. You're not allowed to do that, right? We're talking about like if you have a single like home that you need to show to a tenant every once in a while or something like that, you can do that. But if it's the equivalent of a full-time job, then that would be considered a prohibited transaction. Excuse me, I gotta get a drink. Okay, how is cash invested? That is, if I fund my account via rollover from an existing IRA or 401k with $100K and ask you to invest $75K into my first investment, do you automatically invest the remaining $25K in some kind of money market fund? No. We just hold it in cash. Similarly, if one of my investments sends you $5,000 dividend, do you have a vehicle to automatically earn some interest on the funds? No, we don't. Sorry. You have to find an investment you want to make, and then you instruct Entrust to make that investment. Otherwise, it just sits in cash. Cash doesn't incur any fees, but it doesn't earn you anything with Entrust. For a Roth conversion made in 2018 by a person over 59.5, are the funds in the converted Roth IRA subject to tax or penalty upon withdrawal? In order for a Roth IRA to be considered tax-free, not only do you have to be over 59.5 when you take the withdrawal, but you also have to have held a Roth, have a Roth account for at least 5 years. So if you do a Roth conversion and you're over 59.5 and you've just established a Roth account, and I'm not even just talking about a Roth with Entrust, I'm talking about a Roth account ever, then you have to wait 5 years before you can take a withdrawal and have it be tax-free. Otherwise, yeah, you're going to pay it. You're going to pay tax. And now you don't pay tax or penalty on well, you wouldn't pay tax or penalty on the conversion, the amount that you take as a conversion, because you already paid taxes on it. But if there's any earnings that come from that, then you would have to pay a tax on that. So, but if you made the conversion, you're over 59.5, and you convert it into a Roth that you've held for over 5 years, then you're good to go. Talk to a CPA about that. These are those kind of questions should really be discussed with a tax person. Do I need a property management, or can I manage the property myself? This is a popular question today. What would be a prohibited transaction when it comes to property management? I'll answer it again. A prohibited transaction would be paying yourself. A prohibited transaction would be doing work on the property that's owned by your IRA. And a prohibited transaction would be if you have a building that's so involved that managing it has become a full-time job, or even a part-time job. It's not black and white. I mean, that's this kind of question. People, like in general, tend to want a black and white question. It doesn't always have a black and white answer to it. I have a checkbook LLC as self-directed IRA with Entrust. Entrust is the sole member, and I'm a sole manager per LLC operating agreement. Okay. My IRA LLC required to submit W-9 forms to receive royalty payments. Okay. How the W-9 should be completed for a self-directed IRA LLC. How do I put LLC-IN there, or Entrust EIN as a sole member? This will determine who will receive 1099 miscellaneous forms, my LLC or Entrust. I am receiving different opinions. Everything is in the LLC. If you have an LLC as a pass-through entity, then the W-9 is filled out in the name of the LLC with the EIN of the LLC. Now the member of the LLC is your IRA, and your IRA has its own tax ID number in that instance, but from a standpoint of filling out the W-9 and then where they're going to send the 1099, they're going to send it to the LLC, not to the IRA. But your IRA is owned by your IRA is owned by, your LLC is owned by an IRA, so it's not going to be subject to taxes. But yeah, you might have to file a report. Okay, next question. Can I partner with one daughter to buy a property and lease it to another daughter? No. Daughter is a disqualified person. So you can partner with one daughter, but you can't lease it to the other daughter. What if a person is under 59.5? What are the consequences? There's a 10% penalty on top of any tax that you have to pay. I think this was the same Roth question, which is, yeah, 10% penalty on top of tax. Although, again, when you're talking about a Roth, you don't have to pay. If you withdraw the amount that was converted or contributed to a Roth, you're not going to pay taxes on that or a penalty because you already paid the taxes on that. It's on the earnings that you incur, that you have within a Roth that has to be over 59.5 in 5 years. How would a cash-out refi distribution work if you purchase a multifamily property with a self-directed IRA and use cash or private capital for the rehab? I'm not sure what the question is. How would a cash-out refi distribution work? You sell the property, the money comes back to the IRA, you take a distribution from your IRA. I'm not really, Jose, you might need to expand on that question a little bit. I'm not sure what you're asking me. I don't understand the option 2 fees. Can you explain them? Option 2 is a fee based on the value of the account. And the percentage that it's based on goes down as the value of your account goes up. So from 0 to $25,000 in the account, we charge an annual fee based on a little under 1%, 0.95% of the value of the account. So if you have exactly $25,000 in the account and you choose option 2, the annual fee is $237.50 per year. The next $25,000 is at 0.7%. So if you have $50,000 and you use the fee option 2, then your fee is going to be $237.50 on that first $25,000 plus 0.7% on the next $25,000, which I think is $175. So you'd be looking at $400 and whatever dollars a year. And then if you have another $50,000, you have 100. Then the next 100,000 is at 0.65. So 50 of that would be at 0.65, et cetera, et cetera. Does Entrust offer crowdfunding options? You're allowed to. You can use your IRA to invest in any crowdfunding site that you want. We do have a discounted fee and a relationship with certain crowdfunding portals that is detailed on our fee disclosure form and on our fees page of our website. But you don't just have to be limited to those crowdfunding sites. If you want to invest in a crowdfunding platform, as long as the platform doesn't limit you to not investing using an IRA or limit you to a specific custodian, then you can most certainly use your Entrust account for that. Is the fee per year or what? Yeah, option 1 and option 2 are both annual fees. We bill them quarterly though. So for example, option 1, the $299 per asset per year, we bill that at $74.75 per quarter. That comes out to $299 a year. I will have a check coming into Entrust each month from a real estate investment. Will that money be sent to my IRA each month by check, or will it just stay in my Entrust account until I ask it to be sent to my IRA? Well, I'm assuming your account with Entrust is an IRA, so by that I'm guessing you mean an IRA with a different custodian. The money will come back to your Entrust account. So I will have a check coming in Entrust each month from a real estate investment. That will come back and we will deposit into the Entrust account. If you want to send that to a different custodian, each time you will have to get with that custodian, fill out their transfer form, and then they will send it to us to request the transfer be processed back to that other custodian. There's no automated sending it to another custodian. You have to instruct each transfer, and you're going to use the other custodian's transfer form to do it. Next question. Hello, I am trying to purchase shares in a real estate investment company. I will not own the real estate, only the shares of the private equity company. Can you let me know the correct forms to use from Entrust? We have a form called a bi-direction letter, which you'll need to complete. Either you can do the form, or once you establish the account, you can log into your account, click on Make Investment, choose Alternative Asset, Private Placement, and follow the instructions from there. We will also need a copy of the purchase agreement or subscription agreement for the shares of the private equity company. So our bi-direction form, along with the subscription agreement or purchase agreement for the private equity company with the IRA listed as the investor. Or just go to, once you establish an account, if you haven't already, log into your account, click Make Investment, and follow the instructions. You'll be able to upload the subscription agreement directly into the portal through the online process. If my entire IRA is invested in a rental property and there's not enough dollars to pay the RMD, how do I handle paying the IRS? You will have to either liquidate all or a percentage of the rental property, or you will have to take an asset as an in-kind distribution. Also, if you have an account with some other custodian, if you have cash with some other custodian, you can take the withdrawal from that account. It doesn't have to come from your Entrust account. But if your entire IRA is only with Entrust and it's all in a rental property and you don't want to sell the property, then you would have to take the equivalent value or equivalent percentage of that asset as a distribution to you. If a loan is taken from my solo 401k, how long can the loan terms be? 5 years. You have 5 years and you have to have a reasonable interest rate. Further to the question I just asked, I've heard your response about FDIC insurance that there is no interest paid on cash balances. So in my early example, is there any practical way to invest small amounts of cash without incurring a purchase sale fee? I mean, the only thing that, really that you'd be looking at potentially is investing in some mutual fund or stock. And Ntrust is not a bank or brokerage firm, so we don't have our own platform for investing in publicly traded stocks, bonds, and mutual funds. That's Fidelity, Charles Schwab, Merrill Lynch, those companies, they have platforms because that's their business model and that's how they make money, is they charge you, they charge a commission and they hold those investments and that's all they hold. We don't do that. Our focus is on alternative assets. So if you wanted to put money, take that small amount and put it into a stock bond or mutual fund, there's a couple ways. You could transfer it or roll it over back to your bank or brokerage firm for investing, or we do have a relationship with Interactive Brokers to provide a platform for investing in the publicly traded stuff. It's not, you essentially would instruct Entrust to make the, we don't charge the transaction fee for that. We charge, Interactive Brokers has a couple dollar pass-through fee that we charge, so we just pass through their fee. So that would be the way you want to do it if you wanted to keep it inside the Entrust account. But to be fair, to be honest, it's not the most elegant process because you have to put it through. You have to go to Interactive Brokers' website, find the fund or stock that you want to invest in, then come back to us with the QSIP, instruct us to place the trade. We place the trade with Interactive Brokers, and now you have it. So there isn't really, unfortunately, there isn't really a very elegant solution for doing that. Otherwise, I mean, crowdfunding portals would be another way. Those are alternative. You could look at some crowdfunding portals. Can I buy property with part Entrust IRA and part personal money? Yes, that's called partnering your IRA. You're allowed to do that on a new investment. Can I use $50,000 from my self-directed IRA with Entrust and borrow $50,000 to buy a $100,000 property? Bear in mind, yes, you can, but it's not going to be you that's going to be borrowing the money. It's going to be the retirement account. It's going to be the IRA that's borrowing the money. So if you're asking, can you use $50,000 from your IRA and then you go to a bank and borrow money in your own personal name? No. Can you use $50,000 and have the IRA borrow the other $50,000 to buy a property? Yes, you can do that. Continuation of previous question, can I buy property as an investment, not personal use, with combination of my Entrust IRA and personal money? Yes, again, that's called partnering your IRA. You are allowed to partner your IRA, and it has to be investment property. It can't be for personal use. If your IRA owns any percentage of the investment, it has to be for investment purposes only. Okay, next question. One private equity fund, which I'm considering investing via Entrust, requires a quarterly fee payment for their administrative expenses. Can I have them send the invoice to you so you pay them directly? The answer to that is yes. You would fill out our payment authorization instructions and tell us that it's going to be a recurring payment, and then we would pay it every time. They would send it to us and we would pay it. Note that that recurring payment has to be the same dollar amount each time. If it's a different dollar amount each time, then unfortunately every time they send the bill, you have to, they can send it directly to us, but we're going to send you an email and say, hey, we got this bill. Do you want us to pay it? And then you have to either log into your account and instruct us to pay the bill, fill out the pay expenses part of that of the online portal, or you'd have to fill out our form. And then they finish the question, or do I need to get the invoice and then direct you to make the payment? Again, I just answered that. Does that count as additional funding with respect to fee for funding? No. Additional funding is if you have an existing asset and you want to add more money to it, like typically through a capital call. You have a fund that you first put $100,000 and then later that you want to add additional $50,000 to that same investment. That's an additional funding. Paying a bill is just paying a bill. There's no fee to that other than how we send the money, which would be $10 for check, $30 for wire, or again, 0 for ACH. So if they accept ACH, send it via ACH. I'll save you $10. Does Entrust offer checkbook self-directed IRA? Okay, just to be clear what that means is that you establish, we'll hold an LLC to give you checkbook control inside the IRA. We don't establish there is no custodian that's going to hand you checks for your retirement account. In order to have a checkbook control of your IRA, you have to have an LLC as a pass-through entity. Some companies in our space will establish that LLC for you. They'll charge you to do that, and then they'll give you the checks for that LLC. They'll open a bank account for the LLC, and they'll give you checks for that LLC, but it's still an LLC. And they'll charge you for that, right? And some of our companies in our space will only do that. If you wanted to invest in real estate, they'll tell you, okay, but we're going to establish an LLC. We'll give you checks, and then you can go buy the property under that LLC. In Entrust case, we will do either one. We'll hold the property directly, or we will hold the LLC, but we don't establish the LLC for you. It's incumbent upon you to either set it up yourself or work with some individual or company to help you set up the LLC for you. I do have a list of some companies and individuals, lawyers that other Entrust clients have used to help them establish LLCs. And they have their business is doing that, is helping people establish LLCs a lot of times for IRAs. So if you want to do it with Entrust and you want to have checkbook control, then I can provide you a list of people that will help you establish the LLC. But they charge, right? There's a fee for that. Just like any companies in our space, they're not going to do it for free. That becomes part of their fees is setting up the LLC for you. Value of the IRA property will remain constant or increase, so in effect we will never stop RMD distribution requirement. Periodically we spend money to maintain the property and is paid through IRA account. How is this reported or supervised? I mean, if the IRA holds direct title on the property, then hopefully you're sending us the bill and we're paying the bill from the account. If you're doing it through the LLC, I mean, it isn't reported. We report the fair market value of your account on an annual basis. The fair market value account is going to be made up of the property and any cash. So if you're paying bills from the account, then that just lowers the cash balance and it gets reported as a fair market value. Supervised? I mean, you know, it's an amount of the responsibility is on you to not do anything that's considered prohibited. And if you are doing anything or do anything that's prohibited, your IRA is at risk of being considered disqualified. So, I mean, we're not supervising it. We are the record keeper of your account and custodian, and we follow your instructions, but we're not supervising you. But we can't do anything that's knowingly prohibited either. So if you instruct us to do something that we know is not allowed, we're going to tell you you're not allowed to do it, and we're not going to do it. Do you recommend the beneficiary of the IRA be your living trust or my sons directly? I don't. I have no recommendation on that. It's up to you. Talk to a lawyer about what they recommend. Can I sell an asset in my IRA to the IRA of a relative, or does that count as a prohibited transaction? It depends upon the relative. You can sell an asset in your IRA to an IRA of a relative as long as that relative is not your spouse, your ancestors, your lineal descendants, or spouses of lineal descendants. But if it's a sibling, cousin, aunt, niece, nephew, uncle, anything like that, sure. Can you explain in option 1 of the account record-keeping fee? It's a flat per asset fee, $299 per asset per year. If you have one property, that's one asset. It doesn't matter the value. If you have one LLC, that's one asset. It doesn't matter the value. It's a flat fee. Do you store precious metals? If so, what's the fee? If not, do you have precious metal storage services you partner with, recommend? No, we are not a depository that holds metals. We don't have any space to hold metals. So there are depositories that will hold metals. We don't determine what depository you want to use. Whoever you purchase the metals from, the dealer, might have a particular depository that they choose to work with. We do have a list of depositories on our website under the precious metals area, so you can contact them, but you know, it's up to you. Again, the dealer may have a particular depository that they recommend that you work with, though. Do you work with cryptocurrencies? If so, do you take care of the storage? That's a good question. We don't have any platform to hold cryptocurrencies directly. If you want to invest in cryptocurrencies in your account, you'll need to do it through an LLC. You'll need to set up an LLC, have the LLC open the account at Coinbase or whoever you're planning on using, have the LLC hold the wallet, have the LLC buy and sell. It all has to be done through an LLC. We don't have a platform for holding cryptocurrencies directly. We looked into it. We were even working with a company to establish a platform for us, and it just all sort of fell by the wayside. 2 years ago, people were going crazy for it. It's really, I was getting calls practically on a daily basis, people asking about investing in cryptocurrencies, but I don't hardly ever get calls on it anymore. Did you just explain that my $1 million in my Entrust is totally FDIC insured by being split up into several banks? Yes, essentially I did say that. So Entrust has a couple $100 million in cash, right? We don't hold a couple $100 million in one account. The couple $100 million of undirected cash. That's a couple $100 million out of the $3.5 billion that we have. A couple $100 million of that is made up in cash. We take all that cash and we put $5, $10 million at a bunch of different banks, right? So your $1 million is, if you have $1 million and that we have $200 million, then you make up 0.5% of our total, right? Just to make the figures easy. Hopefully I'm doing the math right. So that means that every single account that we have, you hold 0.5% of every bank account that we have, right? And since your 0.5% is not going to exceed $250,000 at any account that we have, that means your $1 million is fully FDIC insured, okay? If you have any more questions about that, I'm probably not going to be able to explain it any more clear than that. Next question, can my wife and I, via our separate IRA accounts, pool our IRA funds and buy a property? Yes, it's called partnering. 50% each. So yes, you can do that. Follow-up question, can we personally also invest together with our IRA that would be for investors? So yes, you can do that as well. 2 IRA accounts, my wife and I each owning 25% of the property. Yes, you can do that. All of the closing documents, the purchase contract, and title on that property would all be, you'd have to list each IRA and you and your spouse as separate, owners at 25%. And the tenant, if you're renting it out, would either have to make 4 checks out, or the tenant would have to pay a real estate manager, if you had a manager, a property manager, and then the property manager would have to make out 4 different checks. Does Entrust provide any opportunity for investment? I mean, we don't sell investments. We don't actually, recommend investments or endorse any particular investments. We do have kind of a new thing called Entrust Connect, where we do have, once you establish an account with us and you log into your account, you can click on Entrust Connect, and there are a list of some other investment opportunities that other Entrust clients have participated in. We haven't done any due diligence on these investments. We haven't done any research. We're not advising you to invest in these. We're not recommending them. They are simply, we had a number of clients express an interest in other investment opportunities that they wouldn't know about, and we had always had a very sort of bright red line that we don't, we're not going to do that. But we got so much interest in it that we decided, we looked into it legally. The owner of our company sort of, talked to all the necessary people, our regulator, about doing that, and decided, we'll put this list of investment opportunities on there that ostensibly we're going to be updating and changing. I don't know how frequently we've been doing that, but they are investment opportunities that you can look at. But bear in mind, Entrust has done no research or due diligence on the investment. We are not recommending them as an investment you should or could, want to make. Just simply due to popular demand, we put a list of investments up there. Next question, if I receive cash into my account, is there a cost to transfer it to another IRA account so I can earn interest on those funds? The only cost is going to be, depending upon how you send the money, it's $10 to cut a check, $30 to send a wire, and then ACH would be 0. So no, there's no cost to transfer money out other than our bank fee that is a pass-through for us. In the case I partner with an Entrust IRA, can I do work on the property and get paid? No. Not only can you not get paid, you can't do the work on the property. In any case, can I work on the property and not get paid? No. You and any other disqualified person are not allowed to do physical labor on a property, no sweat equity. It's considered an invalid contribution to your IRA. By doing work on a property, you're increasing the value of a property, and you're in effect making a contribution to your retirement account. And the rules state that a contribution to a retirement account must be in cash, and you cannot exceed contribution limits. So doing work on a property would be considered an invalid contribution to your account. Can I explain the online platform? I would need, you'd have to be more specific. Like that could be a long conversation. So Kamlesh, if you want, maybe we take that offline. I can talk about how the online platform works. I mean, we have a couple online platforms. We have Entrust Connect, and then we have the online portal that you can open an account, you can review your statements, you can process transactions, you can pay bills. I mean, that online platform, that is that. You can log in and do all kinds of stuff with your account, including, again, printing out statements, seeing transactions, generating transactions, et cetera, et cetera. Then we have Entrust Connect, which is a portal for our referral partners to use and along with a list of potential investment opportunities that gets listed on the login, your online login. Can I refinance my current loan on an investment property into a loan made by my IRA? No. Reading that again. Can you finance your current loan? See, you're a disqualified person. If I'm reading this correctly, you have a loan and you want to refinance it into a loan from your IRA. First of all, your IRA can't loan to you. And just my answer to that is no, you can't do that. This would be on a current investment, not a new acquisition. Then I, as the owner, would pay the monthly payment. No, you can't do that. You're a prohibited you're a disqualified person. You can't do that. Just to confirm that my Entrust IRA and myself both can be a partner in an LLC to buy a property. Is that correct? Yes, that is correct. Your IRA and you can partner on a new investment. Right? And then that LLC, if you want it to be an LLC, then that LLC can buy property. But the property has to be for investment purposes only. Just because it's through an LLC doesn't allow you to now stay in it or use it for personal use. Next question, can I personally guarantee a mortgage of the LLC holding a property? No. It has to be a non-recourse loan. And by definition, a non-recourse means that the only recourse the lender has is to take the property in the event of default. A personal guarantee now gives other recourse on behalf of the lender. And so that by definition is no longer a non-recourse loan. Is there an option where I can invest into a business with my self-directed IRA and be an employee of that business? What you're talking about doing, you can invest in a business and be an employee, sure. But again, that's a very broad, yes, you can potentially do that, but now we have to get into very specifics. It depends upon what percentage ownership your IRA is going to have. What role as employee are you going to have? What your income is going to be can also play a part. In a very global sense, it's possible, yeah, that you can invest in a business and also be an employee. It's also possible that you can invest in business and want to be an employee and it's prohibited. It just depends upon other factors. We have 4 questions left. Follow-up to the subscription agreement. Do we sign as our FBO account or does Entrust sign in the subscription agreement? Entrust signs it on behalf of the IRA. We do ask for you as the account holder to provide what we call your read and approved signature. So you are going to, for Entrust purposes, for Entrust internal purposes, not for the company, but for us, not for the people you're investing with, but for Entrust, we need you to write somewhere on that agreement in the margins on the signature line, or not on the signature line, somewhere in the signature page, read and approved and sign next to that. The signature line, the FBO, is signed by us. Next question, you may have just answered this, but can my IRA purchase 50% of investment property and the other 50% be purchase owned by a business partner who may or may not own an IRA? Sure, yeah, you can do that. Can I use the self-directed IRA money to make loans to a corporation in which I have 25% ownership? Yeah, that's a good question. There's a difference between owning equity in a property or owning equity in investment, like having your IRA purchase equity in investment that you already own personally, and lending to an entity in which you have ownership. And God, I'd have to remind myself. The answer to that is I'm not sure. I'm not sure if 25% loaning to an entity in which you have your IRA loaning to an entity in which you have 25%, that might be prohibited. I'm gonna ask you, Ronald, to either email me that question so I can forward it to our compliance person, or if you want to, once this webinar closes, that you'll get a chance to provide feedback. You can maybe provide in the feedback, or like I said, send me an email, and I'll get an answer, and then I'll respond to you. I'm going to have to check with our compliance manager on that. Can I place equity certificates in a publicly traded company as a self-directed IRA asset? You can place equity in a company as a contribution to a 401k. Note when you talk about placing certificates, I'm reading that as you're making a contribution. Your IRA can buy equity in a publicly traded company. Obviously, that's what banks and brokerage firms do all the time. But in terms of taking actual equity that you own and just putting it into your account as a contribution, you can't do that into an IRA. You can do that into a 401k. And that was it. That was the last question. It was an hour and 20 minutes exactly. Appreciate everybody joining. If you feel like you didn't get a good answer to your question or you need clarification, there's my contact information. Don't hesitate to send me an email directly, and I promise I'll respond. thanks again for joining and for so many of you being Entrust clients. And have a great week, and we'll see you again soon.